Well, ladies and gentlemen, the hedge funds manipulated the stock so much on Friday. It's no surprise. If you've seen the video we put out on Friday, I called out when we were trading about here. We still had about a half an hour left of trading, which typically the last hour of trading you get the most volume, the most volatility. That's not what we've seen. And like we called out in that video, I stated that there is no way the hedge funds are going to let this close above $23 per share. What happened? We closed regular trading at $22.99 per share and down 4 cents an after hour. So we closed at $22.95 per share. And it's quite comical, to say the least, to see the blatant manipulation that is happening, because it does cost a lot of money to manipulate AMC the way that they are doing. And it's almost comical this in the sense of they don't even understand the amount of money that they are about to lose by continuing to do this. They're personally better off just covering right now, but fuck do we know? We're up 1,000% on the year. Hedge funds are collapsed 20-30%, in some cases 50%. So who knows? What the fuck do we know? We're just retail investors. We're dumb money. So besides that, we're going to talk about some of the data and all of that towards the end of this video, but I want to jump straight into what's going to happen in the broad markets this upcoming week, because we have a very eventful week coming up. We're going to get Jerome Powell and Fed Brainard testifying in front of Congress, and they could drop some bombshells. So all eyes are going to be on that. We also do have some earnings that are going to start coming out, and this is very important. The Fed earnings, as well as we do have data that's coming out, inflation data, right? So inflation, that's the least of concerns. Really, earnings and the Fed is the most, well, I should reword that. The Fed and earnings are the two biggest things the investment world is going to be paying attention to next week. Why? It's because these things matter. They just matter. There's no other way to put it. People have, as of late, been saying, what do you do in finance? How do you get started? How do you know, what's going to happen, the manipulation or the mega bounces I've called out repeatedly. We've hit the last 2 mega bounces right on the head, literally down to the day. And it comes down to the macro investment world, right? What's happening in the markets, what's happening in China, what's happening all around the world plays into AMC and what's going to happen in that sense. So this upcoming week, we're either going to get investors relaxing a little bit, or we're going to see investors become even more fearful than they have been. So this is a very important video. Let's not waste any more time. Let's jump into it. Hit that like button for me. Do what you guys got to do. Consider subscribing to the channel as well. So jumping into it, we have this article. It says inflation, rising rates, and the Federal Reserve could whip stocks around in the week ahead. Key points. After a sharp jump in bond yields to start the year, rising rates could again set the tone for stocks next week. Big events including testimony from Fed Chairman Jerome Powell Tuesday and inflation reports on consumer and producer prices. The week also marks the beginning of the fourth quarter earnings season, with big banks JPMorgan Chase, Citigroup, Wells Fargo reporting Friday. And why this is so key is because we have seen stocks run up so much. And we're generally speaking still seeing stocks at pretty high valuations. Not certainly the crazy high valuations they were at when we knew rates were going to stay low for a long time until, we got rug pulled by Fed Jerome Powell the other day. If earnings are bad, mark my words, the market is going to sell off dramatically. Because the only thing that is propping up stocks right now, even at their current valuations, is presumed good earnings. And I do think this earnings report for Q4 is going to be positive because it was obviously Christmas, the biggest spending time of the year. So I do think earnings are going to be pretty positive for fourth quarter 2021. Heading into the first quarter 2022, once we get earnings that start around, March-ish, that's when you're going to see the possibility for bigger sell-offs and to see that liquidity being drained. As far as the actual dates for next week to be watching, the inflation report comes out January 12th. So keep that in mind. The Federal Reserve Chairman Jerome Powell is slated to also testify Tuesday at his nomination hearing before a Senate panel, while the hearing on Fed Governor Lael Brainard's nomination to the post of vice chair is set for Thursday. The week also marks the start of the fourth quarter earnings period, with results from major banks JP Morgan Chase, Citigroup, and Wells Fargo on Friday. So that's going to be key. Just keep in mind, these things are going to move the markets. They are going to have an impact on AMC to the positive or to the negative in general. Now let's go over some of the data that you guys need to know. Let's go ahead and pull up Ortex to give you guys the scoop of where we are currently at. So we're looking at 17.43% short interest of free float, 89.48 million shares that are sold short. Share utilization is 75.58%. And days to cover at 2.45%. Not too much is actually moving around as far as Ortex is concerned. So keep that in mind. There's not too much actual activity that is being reported to us right now. We know short interest is a whole hell of a lot higher than 17%. That's kind of a joke at this current moment. As far as heading into next week, where the max pain is, the max pain is $24 per share. So that would still signal about $1 upside from where we are currently at. Sounds reasonable. I don't expect any crazy moves just because we have so many big catalysts that are happening this week. If, Fed Jerome Powell comes out and he says what he's pretty much expected to say, and that's they're going to start selling their assets. They're going to make interest rates go up a lot by selling their treasury bonds and forcing them to go up. Then the market should react somewhat bullishly because it's already priced into the markets. But I certainly wouldn't expect a rally based off of bad news that we had expected. It's possible the markets can kind of operate on their own terms and do what they want. So a rally is certainly possible, but I wouldn't be banking on a rally actually happening. I do have an AMC $35 January 14th call. I bought one of them for $100. I'm down like 80%. So for full transparency there, that's what I have on this, basically what I have on the line as far as options is concerned. So I really don't have any incentive to, say any which way. I don't think we're going to see a massive rally next week. That's just probably not going to happen because we are not looking at any significant call activity. Only about 2,300 calls that are in the money and about 63,000 that are out of the money. We also do have 22,000 puts that are in the money and 28,500 puts that are out of the money. We could see a slight bounce though if we do see the stock actually start to make its way up and start to see more calls go into the money because we have such a low amount of calls that are in the money compared to out of the money. So keep that in mind. I wouldn't be going all crazy. I certainly wouldn't be buying a bunch of weekly calls unless you're fully prepared to lose all of that money. Now, the last thing we're going to get into here in this video is going to be the technicals. And really the biggest thing I'm watching for right now, since we did hit that low December 14th at $20.80 per share, and then we did rally up about $12. We also hit that low at $20.80 per share, the same exact low to the penny right here, January 6th. I would expect to see another big move to the upside, depending what happens with the Fed meeting, the inflation report, as well as earnings. That is going to definitely influence AMC. It could be to AMC's benefit if the markets do sell off. We've seen that happen before, and it certainly wouldn't surprise me if that happened again. Now, the technicals, they don't look all too bad right now. If we do start to sell off next week, then you could be looking at some pain coming, and we could definitely come back down to 1850 if things do start to rapidly evolve and get very fearful in the marketplace. I don't expect that to happen. I wouldn't be, putting my money out on the line expecting a drop, but still something to keep mindful of. Now, this is officially as well, just to point that out, a double bottom. That is a technical sign that does indicate a possible reversal from a bearish downtrend into a bullish uptrend. So watch for all of this to come to fruition. We really have to watch the 20-day simple moving average, which has come down, and if we can break above that, as this has been a long running resistance level, then we will get some steam to the upside, and that is at $26.57 per share. Also, the MACD is bearish. So that is going to conclude this video. Hope you guys enjoyed it. Hit the like button for me. Do what you guys got to do. Consider subscribing to the channel. Let me know down below in the comment section, what is your price prediction? What do you think the Fed is going to say? Inflation, how do you think that will affect the stock as well? Love and appreciate you guys. Thank you for watching. I will see you in the next one.